Hello, welcome back to Not So Late Night Show. I think today we'll do a special coverage about Evergrande Groups, which is 恒大集团, and then we'll tell you what is actually going on with this company and will this trigger a market crash. And before I start, a quick disclaimer is all these things just for sharing purposes. Don't take this as a buy or sell advice. Okay, so I think we'll go straight into the company alone and then what happened recently. So you can see a lot of demonstration actually happened in front of their HQ or even in front of their property showrooms and so on, due to a lot of people are worried all their investment might not be able to get back the money, and then they wanted to get the management to explain what's really going on. And of course, due to all these things that's happening around Evergrande Groups, it causes their share price to drop to one of the lowest point in the recent 5 years. And of course, what is really happening? But before we start to talk about that, a quick introduction about 恒大集团, Evergrande Groups. They are China's second largest property developer by sales. The top one is actually Country Garden, or in Mandarin we call it as Pikuyuan. And then they also 122nd largest group in the world by revenue from the Fortune Global 500 list. And their holding company is actually not in China, but in Cayman Islands. And their headquarters are now in Shenzhen. And of course, it's founded by this guy called Xu Jiaying. He actually go into property development since he was 30s to actually 40s. And then he managed to ride on the wave of the China that actually opened up the entire country. And he managed to make his fortunes. And one of the time, I think a few years back, he even become the richest guy by records in China. And of course, beyond property development, they also go into some other funny things, in my opinions. They also go into the so-called 恒大冰泉, or the mineral waters, under their Evergrande's health groups. And other than that, one of the biggest thing that you might remember, this guy is actually, he actually worked with Alibaba Group with Jack Ma to acquire Guangzhou Football Club, and then pump in a lot of money, hired popular coach to bring them to become the champion of AFC Champions League back in 2013 and 2015. And of course, beyond just football club, now they are in new energies. They used to invest in this company called Faraday Futures. Of course, subsequently, they have pulled out. And then right now, they wanted to focus into their own development of new energy vehicles under this brand called Hengci. And then this actually built up the entire Evergrande empire, covering beyond property development, go into the new energy sectors. And beyond that, they also have some of the thing on the health side, which is the mineral waters. So how can such a big company like this go into such a big scandal and almost trigger a market crash? I will pass it to Jupan to continue to tell you what really happened and then what is the reason behind.
All right, thank you, Junpeng. So from a brief introduction, you actually see that, this is actually a big company that has plenty of, other verticals or other businesses apart from the so-called main core, which is property development and also construction. So, of course, usually such a big company, when they hit the news for the negative reasons or bad limelight, is actually something big, and I think usually we don't see such kind of news coming out from China and making the waves globally. So I will deep dive into much deeper, and then actually give our thoughts or even try to postulate whether it is as bad as it seems, and will it actually trigger a market crash. So you can see right here we have a chart which is showing the nominal residential property price index. So in very basic terms, it's actually capturing the so-called housing price of China, right? You can see that ever since 2010 until 2019, it has been on an increasing run. But I would say that the so-called triggering point, or the so-called trend that starts to move happens around 2015, 2016, so where you can see that it actually went up significantly higher compared to the previous years, and that is like no stop to it, right? It keeps on going higher and higher without any cooling measure, without any correction or so-called support in terms of the retracement in terms of price. So the next one you can see right here is actually China Evergrande's historical results. You can see that they have been tapping on top of the increasing price index of the China property. The revenue actually grew also as well since 2016. But you can see that ever since when they hit around 2018, the growth starts to taper and starts to stabilize. But one thing that you really need to keep an eye on is actually, even though the revenue is significantly higher for the past few years, but the profit is actually on a decreasing trend. So something must not be right there, right? Because if it's a good business, usually the downline or the bottom line would actually grow at a faster rate than the top line due to operation leverage. But for Hengda or even Evergrande, it's not the case. So something might not be right. This is a small red flag that actually piques an interest of the investor's mind when we look at such trends. Of course, if you look at the so-called secondary, more deep down information, you will notice that if you compare China's vacancy rates of their property against other more mature markets like Hong Kong, Japan, Taiwan, and also US, you will notice that their vacancy rates of their property is actually on the higher side. To be exact, it's around 20+%. And for the other countries like Japan, Taiwan, and US, it's just hovering around a little bit above 10%. So I would say close to 2 times much more vacancy units in China, and that actually paints a very red flag to the so-called property players in China, right? You cannot keep on selling properties at a higher price, and then yet after your so-called buyers buy them, the property is going to be vacant. It's not actually going to generate any investment returns also. So this is one of the also key red flags that can actually paint some cautious for those who are actually wanting to invest into property stocks, not just China, but other parts of the world as well. And if you look at the housing pricing after the so-called vacancy rates that we shared with you just now in 2017, significantly it has came down ever since 2019 to 2020 and 2021. And this cool down, or even this so-called growth in terms of the property prices, is not just one part of China, but collectively tier 1 cities, tier 2 cities, and even the tier 3 cities, collectively everything has been coming down because the prices have been going up too much for the past few years back then. And even with more and more vacant units coming right up, property developers realize that they cannot keep on playing this kind of game, selling properties at an insane high price, and then less and less people are going to buy when the so-called demand runs out. And the next one, you can see it's more towards China Evergrande's financial leverage ratio. They actually have the highest leverage compared to their competitors and peers. The industry average is just around 4 times, but they are actually 3 times more than that, which is at 12 times. So this is a company that is holding on a lot of debt, and with profits so margin thin and even coming down, it actually makes this company very, very dangerous from an investor point of view. And one of the key points or key highlights that actually trigger Evergrande coming into the news as of today was not just a sudden pop of the bubble, right? This actually went back way back then into 2017, when the China government themselves, they are aware that how leveraged the property players are, and they set in some kind of measures to encourage and give them a timeline to actually deleverage, so that in terms of the debt-wise and the leverage-wise, they are not so high. This also helps to ensure that they play within the rules, and it will not trigger any unwanted kind of scenarios, because property players can actually break the bank, just like we see when debt is not handled well. This is what happens to the 2008 financial crisis. So what Evergrande did was actually a little bit smart. They somehow managed to play around with the borrowings, their debts. You can notice that their debts actually coming down near of quarter 2 2021, but overall totality, their total liabilities are still on an increasing trend. So this actually made some kind of triggering point as to why the company actually appeared at the headlines of the news as of today. And if you look at their so-called balance sheet at the deeper level, you'll notice that this company actually holds 1.572 trillion renminbi. And out of this 1.572 trillion, it is actually close to 80% or even 80% of their total liabilities. So out of the total liabilities of 1.966 trillion, around 80% is actually current liabilities, something you have to the obligation to settle it as soon as possible because it's a near-term kind of payment debt or whatsoever. So this is a company that has so many liabilities and so big of the portion of it is actually current liabilities. And wait till you look at the cash portion. The company only has around 150k renminbi. So they don't even have enough cash on hand to service whatever near-term obligations that they are facing. So here comes the so-called interesting part of what the company actually did to find more cash. So before we go into what unscrupulous means, they went on to dig up more cash, just a little bit understanding on what are the limits that the Chinese government actually put into measure to ensure that the property players bite and do not get too high in terms of their debt and leverage. So there are few limits. The first one would be the liability to the asset ratio, including the pre-sales, must be lesser than 70%, and the net debt to equity ratio must be less than 100%. And last but not least, the cash holding is at least equal to the short-term debt. So from the so-called breakdown just now, straight away we know that Evergrande does not have enough cash on hand, and in terms of their debt to equity is also not tally to the so-called limits as well. So you will see that there are other property players that have actually abide to the rule. So the ones that are under the green line, who have 3 ticks, they actually fulfill the 3 limits set by the CCP or the Chinese government, and the one at top, which is China Evergrande, and also Sunac China, and also Greenland and JuJuR. Right. So of course, the limelight today will be on Evergrande, and this is what they actually do. Their first measure to get more cash, to offer more discounts to properties that are on sales. So you want to buy a property, buy Evergrande? Okay, I need you to buy as much as you can, and if you have the cash, I want to tempt you to buy it. Buy immediately. I'll give you a 30% discount. So that actually helped to save them a little bit of time and a little bit of receivables by selling properties at a cheap price. So this was their first measure. I would say still normal under circumstances. But then they eventually find out that, oh, what we are doing right now is also not enough. Selling my properties at 30% discount still does not qualify me to hit the limits set by the government. So the next target they went to target was to actually their own workers. So they asked their workers to lend them cash, else they would be losing their bonus. So this was the first unscrupulous act that they did, was to actually put their workers at ransom to actually get cash from the workers so that they can boost up their cash and cash equivalents. And then they noticed that, oh, it's still not enough. What to do? So they went into financial investment products, right? So they actually become so-called legitimate or illegitimate financial service providers by packaging some kinds of investments and sell it off to the public. So this is where they actually trigger some of the backlash from the public, right, Junbing?
Yeah, so this is the reason why I've shown you some of the demonstration. It's actually linked back to this. A lot of people are worried with all this bad news coming up. Can they ever get back the capitals they have put in? Not talking about the dividends anymore, because I think some of the product they are promised to get, let's say 8 to 12% on an annual basis as an interest payment. So of course, I don't want to pay. I don't want the interest anymore. I just want back my money. And then all these guys just gather at HQ and do demonstration. So this is how bad the situation is because it turned from let's say a bad debt to all the financial institution going into a social problem, because me and you, maybe the 1,000 bucks that I invest in is like I need to save for 6 months. So it can be a very big a sum of money for me for leaving. So of course I need to get back, and this really triggered the alarm and caused a lot of problem that actually appear. But of course, other than that, this week or I mean this early of the weeks, they have actually two interests they're supposed to pay back to some of the bank that they owe to, and they were news or they used to release a statement saying they might not be able to pay for it, and it caused a shock, and people start to actually sell down their share, I mean the Evergrande share, and it caused some of the alert to all the foreign investors. People start to throw China stock, and then it caused some impact going to the US stock, which is for me maybe it's overreacting. If you didn't zoom into what really happened into Evergrande, you think maybe this is something related to Lehman Brothers. It will cause a structural collapse, and then people's might be losing jobs and causing a lot of problem. And now it's actually going back to whether they are going to be saved by the government or not. But of course, the latest news is they make a statement they are able to pay the interest, but this is just a starting. What will happen next is something that we need to monitor. But for me, this is something that very restricted into the China region, because not like me and you will buy the properties in China through them. And then, of course, maybe internally China will have a lot of problem. Maybe the main con or the constructors cannot get back the money. All these things within China. So it shouldn't be echoing out all the effects. And maybe this is an opportunity for us to actually play a part. I think we'll pass to Jupan to share some of the things on how to react, and then doing these kind of things.
Yeah, I think you just covered just now. So some banks actually anticipate that Evergrande won't pay interest. So that was like I think a few days back, but I think as of latest they are somehow miraculously able to pick up enough cash to service their so-called the ones that are actually going to be due soon. So I think you shared a good point. Some of the so-called news headlines out there, they are actually painting a picture that this Evergrande fiasco would actually be the next Lehman Brothers. Actually, if you think back and try to understand it quite deeply, it's actually a different case. Lehman Brothers was actually the banks, the banks were the ones that were greedy. They're actually repackaging mortgage loans and selling it out to the public. And then once those who actually did not qualify for the loans to buy properties actually start to default, then that trigger a huge chain reactions until it actually made the investment banks or the banks around the world actually tank significantly and cause the so-called housing bubble financial crisis. This time around, this one is actually the developer or the property player actually being the one very greedy and over leveraging on their debt, and also they are taking unnecessary kind of leverage. And once they fail to actually settle or satisfy their near-term obligations, then it might trigger some sort of chain reaction as well. As JuBing said, the subcons or the so-called supporting suppliers of the company of Evergrande will actually be also badly impacted. Even the workers will be impacted because they actually held by ransom by the company to actually lend the company cash. But do you think it would trigger a mass market correction, JuBing?
I don't think so. As it won't be as big as Lehman Brothers, for sure. But of course, we should continue to monitor. And all this is a key learning point to make it as a checklist. When you wanted to analyze some of the companies, it must be something wrong that revenue is going up, but then the net profit is not there. And all these things, maybe it can act as a checklist for you to avoid this kind of company.
Yep. So I think this is actually quite a straightforward and brief summary of what has actually happened to Evergrande. Of course, if you want to know more, or if you think that the way we share with you information, the so-called presentation is actually beneficial, do let us know in the comment section what are the kinds of companies that you want us to cover, what are the kinds of so-called investment-related kind of news that you want us to help you digest as well. So of course, if you have any comments, if you think that this will actually trigger a huge market crash, let us know why in the comments as well. We will actually read through and tend to actually come back and see that whether we have missed out anything or not. But that's it for today's Not So Late Night Show. Hope to see you in the next one next week. And of course, if you have any companies you want us to cover, let us know in the comment section as well. Of course, if you like the video, do click thumbs up button and also share it to your friends and family. This will definitely help us grow the platform and the so-called channel. So we'll see you next week. Bye-bye.